Welcome friends, welcome to this discussion on the monthly newsletter that we have come out for the month of June. We talk about how the month of May has progressed, how has the numbers been. Now, just to take you back, in our last newsletter we said that on 7th of April, markets hit a rock bottom. Nifty was trading at 21,800. Who would have expected this kind of sharp U-turn in the market? I mean, as we speak today, markets are trading somewhere around 25,100. So that's like a very strong reversal of about 13% on Nifty 50. What has been really surprising to see is the kind of comeback that mid and small caps have made. I mean, mid caps are up by about 21%, whereas small caps have shown a rebound of 23%. Now it's clear that when the markets had gone downhill, mid and small caps got battered more, and when the recovery happened, these guys have recovered really fast. Having said that, the calendar year to date from 1st January till yesterday, I mean, large caps are still leading the pack against mid and small. I mean, large caps are up 2.3% versus a small cap is down 6.5%. Now guys, I mean, you all know that we follow a rule-based investing method, right? And in this method, we have certain scores. We've spoken about scores earlier also, but just for a quick revision, let me tell you that we have a model which says that market, when to enter, where to enter, how to enter can be defined on the basis of certain scores. I mean, if the market tells me that the score is around 0, it means that it's a great time to invest. Versus if the market is at 1, then we say that look, one should enter with caution and enter in a staggered manner. Versus if the market is trading at a score of 2, then it says that look, the margin of safety is almost out, you should be booking profits and exiting the market. Now, what happened is that when the markets touched 22,400, the scores touched an absolute 0, and it was like a screaming buy in the market. We had said that in our previous newsletter that one should enter in the market at this point of time. Now, nobody knew, obviously, that the Trump tariffs, the China rebuttal versus, I mean, how India-Pakistan situation is playing out, whether the markets would bottom out at 22,400. It actually did went to 21,800 on Nifty. But nobody would have anticipated this kind of a sharp recovery. So, I mean, since we follow a system-based investing, algorithm-based trading, it clearly says that, look, if the scores had hit that rock bottom number, which is like a very rare occurrence, then the next 3-year returns are going to be great. And that is where we said that, look, you should be investing your money. Now, if people would have missed on that, what are the current scores telling me? The current Nifty PE and PB score is at 0.49 and 0.25, which means that this is a top quartile score and not a top decile score. Again, it's a good time to accumulate, it's a good time to enter, but it is not as mouth-watering as what it was 2 months back, right? But still, we are saying that you can invest into large caps and Flexicaps. They are decently valued. One can go in this particular space. But on the mid cap and the small cap, the scores have turned to 0.66 and 1.15. Now that's pretty stretched, right? So we suggest that any new fresh allocation on the mid and small cap side from a lump sum perspective has to be done in a staggered manner. You should approach for a 20-month STP, right? Now the debt score has turned to 7.16. which means that all our long duration calls that we had given erstwhile are all done. I mean, so a year back when the scores were really favorable, we had given a very clear call that one can enter into medium duration, long duration and dynamic bond funds because we were expecting the interest rates to go down. It did happen. So last 1 year, we did saw that there were 3 rounds of rate cuts and we saw a rate cut of 100 basis point over the last 1 year, and which is where when you look at these medium duration, your dynamic bond funds, they have given you returns north of 10%. Now that is great from a debt perspective, from a debt context, this is great. But I'm saying that fresh allocation should not be done into this particular category. I would say that the margin of safety is pretty low now. So one can look at investing into liquid funds or ultra short duration funds or a floating rate fund at the max, but not the longer duration. I mean, if somebody is looking to book profits, they can in this particular category, right? We also follow a macro score, which we call as the blended score, and the blended score has come at 4.95. The range is between 4 to 8. So when it is towards 4, it means it's a great time from the macro perspective. And I'll talk about certain macro numbers. They have done really well, right? The only sad point about our scores right now is that the Buffett indicator, which is more of a circuit breaker for us, has actually got triggered this month. And if that gets triggered, then all our recommendations get toned down by 20%, which means that if I'm telling you to get into equities, it means that keep 20% aside on debt and remaining 80% can go into equities, right? The focus category in equity obviously is large caps and Flexicaps right now, versus on the hybrid space, BAFs and MAFs are all-weather products, and anybody with a moderate risk profile can attempt this category at any point of time, right? Now, what has gone right for India on the macro front? The GDP growth forecast has been retained at 7% for FY26. That's a very good number. Inflation has actually come out well. As I'm speaking to you, the latest inflation numbers has come south of 3%. Now that's fantastic. Inflation is completely under control. RBI has eased its policy. So the latest monetary policy saw a 50 basis point rate cut. That's very, very accommodative to growth, right? The forex collection, the forex reserves have somewhere maintained around $690 billion figure, which is a great number to have. And the GST collection has been a surprise, and it has come at 2.01 lakh crore for the month of May. That's huge, right? The RBI dividend of 2.69 lakh crore was like the icing on the cake. This really eases the pressure on the government from the fiscal deficit perspective, and I feel that we're on the right track to achieve the fiscal prudence, right? So all in all, I'll just close this discussion by saying that, look, markets are in a good shape. One should look at investing into large caps, flexi caps, multi-asset, balance advantage. All these are preferred categories depending upon your risk profile, right? SIPs for long term should continue the way it is continuing, versus a short term SIP can be looked into, right? Banking and financial services, my dear friends, is one of our preferred categories from a sector perspective. So guys, that's it from my side. If you have any queries, do write back to me and I'll get in touch with you. We follow system-based approach, and we believe that this system-based approach can actually help clients beat the market, beat the benchmark. So do follow us on all our social media handles. This report goes out every month. We've started this practice a month back, and we make sure that this will come to you every month, right? So stay tuned for the next edition. And if you need any help, then do reach out to us. Our team would be there to help you. Thank you so much.
Mutual fund investments are subject to market risk. Please read the offer document carefully before investing.